A good treasury management is essential to all organizations. Even in small organizations where accounting and payroll are processed by third parties, it's advisable to have a good internal management of treasury. Of course, there may be other resources that are more important than the financial ones at long term, such as people, knowledge, or different and innovative products. However, at short term, the management of financial resources of an organization can jeopardize its survival, thus becoming a matter of life and death. And here Treasury plays a central role. It's central regarding the daily cash availability that's needed in order to meet the commitments as well as the better application that should be given to surplus cash availability. It's central in provisional terms because it's essential to look ahead and anticipate problems that may arise in order to confront them and resolve them. Besides the direct management of financial resources on a daily basis and in provisional terms, based on Treasury accounts accomplished in provisional operations, Treasury must ensure the reconciliation of the operations processed in it, along with their reflections in the banks, that is, on bank statements, the proper accounting reflections of these movements, the reflections of these operations on the checking accounts of third parties, the issuance of documents related to some of these operations, namely receipts, payment orders, and transfers and bank payment slips, and still some specific controls, usually based on non-monetary treasury accounts and special account operations. This applies, for instance, to provisional accounts for payment of taxes. Additionally, and for some types of organizations, particularly the public administration sector, it's necessary to be able to link many of these operations to the budget and bonded assets, validation or bonded debts, as well as payment authorizations themselves. Our Treasury module, based on an experience of over 20 years in all sorts of organizations, addresses all these requirements without, however, entangling and overburdening more common organizations with complex details. Finally, we have to highlight that accounts receivable, accounts payable, banking relations, etc. are often referred to in this area. They are called Treasury Scopes in our module. These and all scopes deemed justifiable are then created. Thus, not only are these classical divisions answered to, but other specific scopes of every organization can also be isolated. For instance, receipts from students in a university, rental receipts in a real estate agency, sales of electricity in an electric power company, scholarship grants in a foundation. Thus, given treasury operations having certain unique features are then isolated and consequently distinguished from other receipts and payments in general. These operations are usually broken down according to their similarity, volume in terms of number of transactions, and because they involve special forms of payments such as direct debiting procedures, payments at counters and others, ATMs, and more. Let's briefly consider the base menu of this module. The Treasury menu is divided into several areas. It includes parameterization facilities and access to business and tax documents queries, as well as journals and statements of general ledger accounts related to Treasury. In the center, we see the most frequently used features. First, we have Treasury Transactions and accounts, and then reconciliations and closures. Are many types of controls and access to third parties checking accounts, which is a common sub-module of Treasury, business and tax documents, and accounting. Treasury operations embody the main feature of this module. Most operations are carried out in them. All operations performed in Treasury are recorded in here, and so are the ones that are expected to take place in the future. So both the actual and provisional controls of Treasury are ensured. Such operations are reflected not only in Treasury accounts and third parties checking accounts, but also in accounting. It is also over these operations that documents are issued, periods of accounts are closed and reopened, etc. In short, we have the core of Treasury activities under one option, on a single screen. Let's see. Most daily activities take place in transactions. A typical listing of Treasury transactions is like this one, surely containing more transactions. The colors highlight the three main areas: the financial document, its number and description, the total value of the transaction as well as the account balance, the source document and the respective third party linked to the transaction. Looking here, positive and negative transactions. And here is how the balance changes. And this is the simple base of Treasury control. A very important aspect of it is that expected transactions can be recorded for future dates. Thus, the balance column will display the future status of the financial resources at any time. Another important aspect is the possibility of classifying Treasury transactions. Here in this yellow column, we have, for instance, the number 1. Which shows permanent fixed revenues by putting the cursor on it. The number 5 means permanent fixed expenses. Of course, the encoding is set by each organization and may contain more digits. As we shall see later on, we can exploit the listings based on this classification structure, which is an important aid in managing Treasury and business in general. Another essential point that differentiates our solution from others is that, on this list, we can give the commands required for the daily functioning of the Treasury module, ranging from issuance of receipts to accounting and reconciliation. For instance, to enter this into accounting, just clicking here. Of course, these accounts serve only as parameters and vary from country to country and from organization to organization. As we can see, the transactions of the accounts can be immediately generated and accessed. Well, if we wanted to issue a receipt for this payment, we should go to Outputs and issue that receipt. In short, we have the core of daily Treasury activities under one option, on a single screen, namely, the record of transactions and the control of the balance evolution, accounting, issuance of outputs, reports. Bank reconciliation is a critical element from both the point of view of management and the legal and accounting point of view. Bank reconciliation is one of the key elements to ensure the accuracy of accounts based on records from external entities such as bank statements. Let's see how reconciliation is done. For the reconciliation itself, there are options for bank statements. However, let's assume it has already been recorded. We enter the bank statement option, and we see a bank statement dated back to December 2009. Pay close attention to this area highlighted in pink and filled with zeros. No records have been reconciled yet. We assume we are working with a synthetic bank statement containing only the start and end dates. This is a simple way to make reconciliations and suits most companies. We shall refer to the automatic reconciliation further. Let's access then the Treasury transactions that are to be reconciled. Let's also ask for the Bank X. 4 operations to be reconciled are shown. I select all of them and give the reconcile command. Here is the statement. I click on the OK button. We can see now that the row to be reconciled has been selected. I click on the OK button again. The next row is selected. I click on the OK button. Another row is selected. I have reconciled 3 rows. I could go on, but now I won't. Let's exit this screen. When I do so, I notice the listing is divided in 2 parts. The first one shows the transactions that have been reconciled. Notice their status is XC. The second one shows the transactions to be reconciled. Let's see the bank statement now. We notice that some operations have already been reconciled in Treasury. The accumulated amount is 17,685. The color pink is still displayed. Let's go back to the page of Treasury Transactions in order to reconcile what's still open. Let's proceed with the remaining record. It's reconciled now. Then let's go back to the bank statements. That's it. The transactions are now reconciled. We have to address 2 issues now. Firstly, we note that it is reconciled against Treasury and Accounting. As we can see, the color pink has given room to the color yellow. That is, it has been reconciled. However, the important thing is that even without the accounting module, the Treasury module supports banks' reconciliations. Secondly, if we access the commands available in the bank statement screen, we see the automatic reconciliation command. Now, when it comes to organizations with a great volume of operations, the automatic reconciliation can be very advantageous. However, in order to run this command, we cannot use the synthetic bank statement and all the rows of the bank statement must be inserted. This is because the automatic reconciliation compares each row of the bank statements with Treasury transactions to be reconciled through a series of algorithms. In general, inserting the rows of the bank statement manually is very troublesome and it's not worth it. It is worthwhile, though, when we receive bank statements from banks in electronic format, and so it's possible to download their rows automatically. Anyway, automatic reconciliation is never 100% guaranteed. Those operations that have not been automatically reconciled will have to be reconciled through the manual reconciliation method we mentioned earlier. Many controls based on the operations recorded into the system are available in the form of listings and target specific purposes. Let's see. In the area of miscellaneous controls, each option targets a specific purpose. By entering the control of methods of payment and choosing MCH as the type of document from the bank account star, we get a list with all the checks issued to that account within a given period of time. We can see the checks listed in order, which allows us to determine if any of them has been lost. We remind you that, in our module, all the checks that have been voided must be registered with the 0 value, and the cancelled code in order to never lose track of them. Another common control is the one about transfers. It's similar to the case above. Only the type of financial document is different. The control of receipts is similar to that of the case above, except that the listing is directed to receipts and ordered by number. Now the option Transactions by Third Party is far more important and widely used. Let's access it. As we can see, there is a series of operations for the third-party Granimar. This option is often used to adjust the estimated payment dates as well as the dates on which we intend to pay third parties the estimated values. In a way, without fully replacing the third parties' checking accounts, it's possible to keep track of what we owe and what is owed to us. This is also very useful to provide us with an actual view of which third parties our payments and receipts have been directed to. Transactions per contract are similar to those of the case above, except that the listing is oriented to contracts. Let's check transactions per treasury class now. As we can see, the listing displayed is divided into operations classified as 1 and 5. In terms of treasury, the possibility of having a classification of its own is essential because it allows a much better analysis of the cash flow. Under this classification model, beyond the scope of expenses and revenues, it is also very important to highlight their provisional scope. In other words, if they are fixed and secured in principle, if they are variable and therefore depend on factors that are less safe, etc. It is not advisable to have a great deal of permanent fixed expenses covered by non-permanent variable revenues. A key element of this classification model is to highlight certain financial flows such as loans. Another control is the typical cash control sheet. Let's check the cash control sheet dated May 17, 2005. As we can see, the opening balance is 222, and the closing balance is 407.31. The source of the transactions is identified, whether they are debit or credit, as well as the accumulated value. Once the operations have been recorded into the system, it is smart enough to automatically perform their reflections on accounting records. This is a very important facility of the Treasury module, and one of those that distinguishes our module from others. Here's how to automatically enter Treasury operations into accounting. Let's go back to Treasury Transactions. Let's undo the accounting procedure of the transaction we had previously entered in accounting by clicking on the G- command. Let's then see how automatic accounting works. It's very simple. Everything is based on the Treasury account itself and on the information highlighted in pink, the scope journal, and the type of transaction. By placing the cursor over QR, the system shows that checking accounts discharge receipts, and by placing the cursor over the type of transaction VNC, regular sales of services is displayed. If we access the jump options and jump to setting of transactions, the system shows that this transaction operates the account 2111, General Customers in Debt. We go back and click on G+ to enter it into accounting. Here we have the accounting transaction again, but now we realize how we got to them. This account 121 is defined in the Treasury account of the Bank X. If the operation is positive, then the system debits it. If it is negative, the system credits it. And how about the account 2111? It comes from the type of transaction VNC as explained above. In essence, the implementation of automatic accounting mechanisms into Treasury results in greater gains, productivity, and accuracy boils down to this. Any organization will be able to do it easily and get the gains incurred. Checking accounts of third parties and collections are essential to the balanced maintenance of financial flows in organizations. Please note that checking accounts must be previously fed with liabilities, that is, debts. The Treasury module only processes receipts and payments, in other words, the settlements of debts. Feeding checking accounts with debts is performed by the business and tax documents and/or by the entries into accounting or still directly in the checking accounts. Let's see how our software supports checking accounts and collection procedures. As mentioned before, the exploitation of checking accounts implies the recording of liabilities that's not performed in the Treasury module. Therefore, let's be brief and leave the deepening of checking accounts of third parties up to the module Management Accounting. The menu of checking accounts is divided into three areas: the area concerning operations with checkings, accounts, and collections, the area concerning the parameterization and control of credit limits, and the area concerning the control of balance aging lists. Let's see the work list of checking accounts. We see in here the evolution of the balance for each third party. Each group of transactions belongs to a third party. The balance is shown on this column. Note that dates range from the most recent to the oldest ones. Thus, on the first row of each group, we can see that the balance for each third party is highlighted in dark yellow. For instance, the balance for the first third party is 2,214.20, negative. As we can see, the document totaling 600 on row 5, credit, has been paid on row 2, debit. And so these two rows are displayed in light green as they are reconciled. The other three rows are shown in dark green because they are to be paid and total the current debt. Moreover, the payment of the document on row 4 is 111 days past due. The one on row 3 is 101 days past due, and the one on row 1 is 11 days past due. Thus, in a simple way, we have gathered the main contents of checking accounts on this listing. It's quite clear that these transactions are automatically generated within the scope of automatic accounting procedures. We have presented in this video the Treasury module, along with the necessary details for a first assessment by your organization. In most cases, the implementation can and should be carried out in phases, starting with the operations to control forms of payment, including bank reconciliation, and then moving on to the reflexes in accounting and checking accounts. In this context, we remind you that the dialogue can be deepened, so we can better analyze your needs and our answers to them. We and the network of partners we integrate are fully prepared to listen to and support you.